In this video, we'll be showing you the simple way to start investing in cryptocurrency, understanding cryptocurrency. Are you ready to understand the mysterious world of cryptocurrency? Let's demystify it together. First, let's define what cryptocurrency is. Simply put, it's a digital or virtual currency that uses cryptography for security. It operates independently of a central bank or government. The most well-known cryptocurrency is Bitcoin, but there are thousands of others such as Ethereum, Litecoin, and more. But what makes cryptocurrency so special? The answer lies in its underlying technology, blockchain. Blockchain is a decentralized digital ledger that records all transactions made with a particular cryptocurrency. It's like a digital version of a public ledger, where all transactions are recorded and can be viewed by anyone. The transparency and security provided by blockchain technology is what makes cryptocurrency so appealing. Now that you have a basic understanding of what cryptocurrency is and how it works, let's take a look at some of the most popular cryptocurrencies on the market. Bitcoin, as mentioned earlier, is the original and most well-known cryptocurrency. It was created in 2009 and has the highest market capitalization of any cryptocurrency. Ethereum, on the other hand, is a newer cryptocurrency that was created in 2015. It's known for its smart contract functionality, which allows for the creation of decentralized applications. Litecoin, created in 2011, is similar to Bitcoin, but has faster transaction times and lower fees. Each of these cryptocurrencies has its own unique characteristics and potential uses, so it's important to research and understand them before investing. That's it for now. You have a solid foundation on what cryptocurrency is and what are some of the most popular ones. In the next chapter, we'll take a deeper dive on how to set up a wallet and buy your first cryptocurrency. Setting up a wallet. A wallet, in the context of cryptocurrency, is a digital wallet where you can store, send, and receive your digital assets. But before we dive into the setup process, let's talk about why a wallet is important. Think of a cryptocurrency wallet as the key to your digital assets. It's where you'll store your cryptocurrency, and it's the only way to access it. Without a wallet, your cryptocurrency is like a car without a key. It's there, but you can't use it. Now, let's talk about the different types of wallets available. There are software wallets, which are digital wallets that can be accessed through a computer or a mobile device, and hardware wallets, which are physical devices that store your cryptocurrency offline for added security. Both types have their own advantages and disadvantages, so it's important to research and choose the one that's best for you. Now, let's get to the fun part, setting up your wallet. If you're going for a software wallet, the process is relatively simple. First, you'll need to download the wallet software from the provider's website. Next, you'll need to create a new wallet and set a strong password to protect your digital assets. Finally, you'll be given a private key, which is a long string of numbers and letters that you'll use to access your wallet. Keep this private key safe and secure, as it's the only way to access your cryptocurrency. If you decide to go for a hardware wallet, the process is slightly different. You'll need to purchase a hardware wallet from a reputable provider and follow the instructions to set it up. Once it's set up, you'll need to create a new wallet and set a strong password. And that's it. Have a fully functional cryptocurrency wallet where you can store, send, and receive your digital assets. In the next chapter, we'll take a look at how to buy your first cryptocurrency and get it into your wallet. Buying cryptocurrency. Are you ready to take the plunge and invest in digital assets? Before we dive into the process, let's talk about why buying cryptocurrency is becoming increasingly popular. First, buying cryptocurrency is fast and efficient. Transactions are typically processed in minutes or even seconds compared to traditional banking methods, which can take days. Second, buying cryptocurrency allows you to be your own bank. You have full control over your assets and don't have to rely on a third party to access or manage them. And lastly, the potential for high returns is hard to ignore. Now, let's talk about the different platforms available for buying cryptocurrency. There are exchanges, which are online platforms that allow you to buy and sell different cryptocurrencies, and peer-to-peer platforms which connect buyers and sellers directly. Both have their own advantages and disadvantages, so it's important to research and choose the one that's best for you. Now, let's get to the fun part, buying your first cryptocurrency. If you're going for an exchange, the process is relatively simple. First, you'll need to create an account on the exchange and verify your identity. Next, you'll need to link your bank account or credit card to the exchange so you can make a purchase. Finally, you'll need to navigate to the exchange's trading page, choose the cryptocurrency you want to buy, and place an order. If you decide to go for a peer-to-peer platform, the process is slightly different. You'll need to create an account on the platform, verify your identity, and find a seller that accepts the payment method you prefer. Once you've found a seller, you can negotiate the price and make the purchase. And that's it. Have your first cryptocurrency. In the next chapter, we'll take a look at how to store and secure your cryptocurrency to ensure the safety of your digital assets. Storing and securing your cryptocurrency, we'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. After all, you wouldn't leave your cash lying around in the open, would you? In this chapter, we'll talk about the best ways to keep your cryptocurrency safe and sound. First, let's talk about storage. The best way to store your cryptocurrency is in a hardware wallet. These wallets, as you may recall from the previous chapter, are physical devices that store your cryptocurrency offline. This added layer of security is important because it makes it almost impossible for hackers to steal your cryptocurrency. But what about software wallets? They're also a viable option, but it's important to use a reputable provider and follow best practices, such as using a strong password and two-factor authentication. Now, let's talk about security. The most important thing you can do to secure your cryptocurrency is to keep your private key safe. Your private key is the long string of numbers and letters that you use to access your wallet. Don't share it with anyone and make sure to store it in a safe place. Another important security measure is to use a strong and unique password for your wallet and avoid using public Wi-Fi when accessing your wallet. In addition, it's important to stay informed about the latest security threats and updates. Keep an eye out for phishing scams and be wary of suspicious emails or messages that ask for your private key or login information. And that's it. By following these tips, you'll be well on your way to keeping your cryptocurrency safe and secure. In the next chapter, we'll take a look at how to monitor and manage your investment to ensure the growth of your digital assets. Monitoring and managing your investment. In this chapter, we'll talk about the best ways to track the value of your cryptocurrency and make informed decisions. First, let's talk about tracking the value of your cryptocurrency. There are a lot of websites and apps that allow you to track the value of your cryptocurrency in real time. Some popular options include CoinMarketCap, CryptoCompare, and CoinGecko. These platforms provide you with information such as the current value, trading volume, and price history of different cryptocurrencies. Now let's talk about managing your investment. One of the most important things you can do is to diversify your portfolio. This means investing in different types of cryptocurrencies rather than putting all your eggs in one basket. This helps to spread the risk and increase the chances of earning a return on your investment. Another important aspect of managing your investment is to stay informed about the latest developments in the cryptocurrency market. This includes keeping an eye on news and developments related to the specific cryptocurrency you've invested in, as well as broader trends in the market. It's also important to have a plan for when to buy and when to sell. This is called a strategy, and it's important to have one in order to make informed decisions and avoid emotional impulses. Setting a stop loss order can also be a good idea. This is a predetermined price at which you'll sell your cryptocurrency if the value drops to that level. Tax implications. First, let's talk about the basics. In most countries, cryptocurrency is treated as property for tax purposes. This means that when you sell or trade your cryptocurrency, you may be subject to capital gains tax. The tax rate will depend on your country's tax laws and your personal tax bracket. It's also important to note that if you use your cryptocurrency to make a purchase, you may be subject to sales tax. Additionally, if you receive cryptocurrency as payment for goods or services, it's considered income and you'll need to report it on your taxes. Now let's talk about record keeping. It's important to keep accurate records of all your cryptocurrency transactions, including the date of the transaction, the value of the cryptocurrency in use date at the time of the transaction, and any costs associated with the transaction, such as trading fee. It's also important to be aware of any tax laws and regulations specific to your country. Some countries, for example, have specific reporting requirements for cryptocurrency transactions. Failure to comply with these laws can result in penalties and fines. Risks and considerations. First, let's talk about the volatility of the market. Cryptocurrency prices can be highly volatile and can fluctuate dramatically in a short period of time. This means that the value of your investment can go up or down significantly in a short period of time. This can be both an opportunity and a risk. Another risk to consider is the potential for fraud and scams. As with any new and developing market, there are always bad actors looking to take advantage of unsuspecting investors. It's important to thoroughly research any investment opportunity and be wary of any offers that seem too good to be true. It's also important to consider the regulatory environment. Cryptocurrency is still a relatively new technology, and regulations are still evolving. This means that the rules and regulations surrounding cryptocurrency can change rapidly, and this can have an impact on the value of your investment. Lastly, it's important to consider the long-term prospects of the cryptocurrency you're considering investing in. Some cryptocurrencies have a solid team of developers, a strong community, and a clear use case. Others may not be as well established or have a clear path to mainstream adoption. It's important to research and understand the long-term prospects of any cryptocurrency before investing. Alternatives to direct investment. As you may have noticed, buying and holding cryptocurrency can be risky, but that doesn't mean you have to miss out on the potential returns. In this chapter, we'll talk about alternative ways to invest in the crypto market. First, let's talk about cryptocurrency-related investment products such as ETFs, exchange-traded funds, and mutual funds. These are investment vehicles that allow you to invest in a basket of assets, including cryptocurrency. This means you don't have to worry about the technicalities of buying, storing, and securing your assets, as this will be done by the fund's management team. Another alternative to direct investment is to invest in companies that are involved in the cryptocurrency industry, such as mining companies or blockchain technology companies. This allows you to gain exposure to the crypto market without the added risk of directly holding the assets. Another alternative to direct investment is to use a crypto lending platform. This allows you to lend your cryptocurrency to a borrower and earn interest on it without having to sell it. It's important to note that each of these alternatives comes with its own set of pros and cons, so it's important to research and understand them before making any investment decisions. By now, you should have a solid understanding of what cryptocurrency is, how it works, and the potential risks and rewards associated with investing in it. We hope this video has provided you with the information and inspiration you need to make informed decisions about investing in the crypto market. But remember, investing in cryptocurrency is not for the faint of heart. The market can be highly volatile, and the regulatory environment is still evolving. It's important to do your own research, consult with a financial advisor, and invest only what you can afford to lose. We also want to remind you that, as with any investment, diversification is key. Don't put all your eggs in one basket, and explore different options, such as ETFs and mutual funds, to spread the risk.